Hi, my name is Doug Goldstein. This is what you need to know about asset allocation. If you have any questions or comments, by the way, about what you hear today, please feel free to get in touch with me. My email address is doug@profile-financial.com. Was Miguel Cervantes Don Quixote fighting imaginary windmills or market volatility when he said, "Don't put all of your eggs in one basket"? Putting all of your assets in one basket doesn't keep them as safe as you might think, because there is always risk that you might lose all of them at once. The way to counter this is the investment strategy of asset allocation. Asset allocation or diversification might be even more important than picking the right stocks. The idea is to diversify your money among different types of assets, such as equities, fixed income, and cash and its equivalents, rather than putting all your money into one single asset class. This is going to help you to minimize, not eliminate, but minimize potential losses. The main reason for practicing asset allocation and having a diversified portfolio is to minimize potential losses. If you invest in a single asset class and it does badly, you could sustain a heavy loss. However, if you spread your investments among different asset classes, if one of those asset classes performs poorly, your losses could be mitigated by holdings in different, hopefully better performing asset classes. For example, historically, when bonds tend to have low interest rates, stocks rise in value, and in periods of high interest rates, bonds might outperform stocks. Of course, past performance is no guarantee of future returns. How do you choose which asset classes to invest in and in which proportions? This depends on your personal situation and goals. If you want to save for a specific short-term goal, you'd put more of your money into liquid assets that minimize jeopardizing the principal, things like certificates of deposit, CDs, money markets, or just cash in the bank. However, if you are investing for the long term, you might include a larger proportion of stocks and other growth investments in your portfolio. As the goal is more long term, you have more time to ride out market fluctuations. To find out more about asset allocation and the importance of having a diversified portfolio, read the blog that I wrote at www.profile-financial.com/asset-allocation. Once again, that's profile-financial.com/asset-allocation. Once again, if you have any questions or comments about what you heard today, please feel free to send me an email. My address is doug@profile-financial.com. I'm based in Jerusalem. I work with people who live in Israel who have U.S. brokerage and IRA accounts. Don't forget, before you do any investing, be sure to read our complete disclaimer at www.profile-financial.com/disclaimer.